Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Heritage Foods, one of the marquee shares 2 to 3 years ago, but now it is dwindling down to a mere small cap arena. So let's understand what has gone wrong with the stock and what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now, about Heritage Foods. The company was established in 1992 and they are one of the largest dairy firms of South India and one of the largest here in India. So, what they do is they export milk and milk products to different parts of the world in Europe, the Gulf, and other parts of Asia. And they boast of tie-up with the major FMCG brands as well. So they provide raw, you can say, milk products to these brands to produce chocolates, milkmaid, etc. The products that you have. So Heritage Foods itself is a huge brand, and it was trading at around 50-60 times earnings not far back, about a year and a half back. But currently it has really reversed its momentum, and the stock has fallen from around 880 890 rupees to all the way to 350 360 rupees. And the reasons I'll discuss later on in this presentation. But as far as the company is concerned, they have over a dozen products which include milk, curd, ice cream, lassi, and many more other products of where the base is of milk. They also has a business in the renewable energy sector, but that is a very small portion of the total business that Heritage Foods currently boasts of. If you look at the financials of this quarter, I mean the September quarter of this year compared to last year, we have seen that the sales have grown by around 10%, but there has been a PAT downgrade of not 9.6%, but around 49.6%. So the PAT has dipped by nearly 50%, and the debt has increased over time. So they were having the same kind of debt on around 4-5 crores profit as they were having on a 20-25 crore profit, and that could signal the fact that the debt has increased tremendously. The return on equity is around 10%, where the net profit margin has dwindled down to only 1.6% from around 8 to 10% that it was earlier. So it's now down to below 2% at the moment, the net profit margin. In terms of the valuations, the company is trading at 20 times earnings, current earnings, which for an FMCG company is pretty good, because normally FMCG company trades at around between lower levels of 40-45 times to around 75-80 times, but at 20 times. But there is a reason for this. Decline in PE has taken place only because of bad results, and they have been continuously downgrades in terms of numbers over the last 1 year. So the last 3-4 quarters has not been that great for Heritage Food, and that's why the PE ratio from around 60 has gone down to 20. There is a good institutional holding of around 35-40% in the stock. There's a 39-40% holding of the promoters. Only around 20-21% holding is with the retail investors. The market cap of the company is around 1700 crores, and even though it trades at around 20 times earnings, the stock looks pretty expensive. Why is that? Because of the numbers. The numbers of the company is not looking like improving. In fact, on an operating level, the company is going in close to losses, and the reasons are there to see, which I'll discuss just now. But the fact remains that for an FMCG company to go into losses, we have seen what happened with a future group company, which has never come into profits over the last 5-6 years, even though it has told that it will come into profit in terms of consolidated, but it has not. And the stock has fallen from around 70-80 levels to now 20 odd levels, and probably you'll understand which stock I'm talking about. A similar fate is being run here by the investors in Heritage Foods. The stock has fallen from around 880 890 levels all the way to 360 now, and I'll make you understand as to how the stock technicals also work in this presentation. So, what are the problem areas? Why is this decline, huge decline? The raw material cost has really eaten into the sales number. So, the sales had increased, but the raw material has increased by around 23% from last year. And their raw material cost comes in the form of employee cost as well as oil and gas, because of the factories being run in order to produce these products, and the fact that the fodder that they have for the animals, from where they take out the milk, and other things that in processing, and also all the raw material cost has escalated in terms of energy, uh, electricity, and so on and so forth. And that has really led to a fact that the profitability numbers has dwindled down, and probably they need to curtail that by having better processes, having efficient processes. But at the moment, because of the higher raw material cost and higher interest, the company is paying pretty good interest on whatever they are making, and that is why the interest cost, the debt numbers has increased, the interest cost has increased, and that has combinedly led to the numbers being bad on the bottom line. The growth has continuously declined, so it's not that just it has been a 1 or 2 odd quarters. It has been for the last 1 year, 4 5 quarters. The numbers have declined continuously, although other FMCG companies which are good, such as the large FMCG company or even mid cap companies like Gillette, etc., into other segments, are producing profitable growth. Whether it is 10%, 8%, 15%, that's another question altogether. But they are producing good growth numbers, and they are not declining even in this competitive market. So probably Heritage Foods has a problem with the product that they are making, or the way they are selling, or maybe the negotiations that they have from their other players whom they are selling to, their sellers, and so on and so forth. But eventually what has happened is that the numbers are looking really bad on the bottom line, and it doesn't look like that it will improve soon. This is the reason, is that the global and national demand has decreased over time, and we have seen how consumption, in terms of discretionary consumptions, has declined here in India and abroad. And even FMCG consumption has declined, as to what the Britannia numbers couple of quarters ago has said, and the Britannia management has told about the biscuits consumption, and so on and so forth. So we have seen across the board lower demand in the consumption sector, and that would hurt the weakest of the players, and Heritage falls under that category, because their numbers had already declined before the slowdown that had taken place over the last 2 3 quarters. Apart from that, geopolitical tension would also eat into the numbers. Why is that? Because of the oil prices going up. Not long ago, probably a couple of years ago, in 2016, the oil prices was at around 35 $40 per barrel, and right now oil is at 68 to $70 per barrel, and on an increasing trend. So for a long period of time, the oil prices remained between 50 and $60 per barrel, and that was pretty good for all companies that had raw material as oil. But now, with the oil prices going up to as much as around 65 or beyond $65 per barrel, that would eat into the you can say numbers, and eventually bottom line would look bad for a lot of companies, where oil is one of the major, you can say, raw material as a segment. So one needs to take all these things into consideration before investing into Heritage Foods. So now, if we look at the technicals of Heritage Foods, the stock is trading at below 200 DMA. So if we look at it, the stock is currently trading at around 365, 368 levels. There is strong support at 350 levels, and the next level on which support comes in is at around 310. So what it seems like, that the stock has fallen from 890 levels all the way to 300 levels, and that is a 60% decline in the valuation of Heritage Foods because of the kind of results that it has been producing. So the investors have run away from the stock. Apart from that, there have been a mid cap and small cap sell off, due to which investors have gone away from such companies as Heritage Foods. It is a 1700 crore market cap company, so a very small cap company in that regard. So if somebody wants to trade this stock, my suggestion is that the major breakout will take place only after 395 levels. So once 395 400 levels are taken out and the stock closes above these levels, only then you buy into the stock with a stop loss of 5-6% lower. And otherwise, you could see levels of 310 again in the stock if there is some shake up post Q3 numbers that would come in probably a few weeks time. It looks extremely weak on the charts, and hence wait for major declines to buy. Otherwise, do not buy such companies unless even for trading, unless there is a breakout above 400 rupee level. So, what needs to be done? Well, avoid till the results improve. That's the first thing. If you have not bought the company, do not buy it unless the results turn around. You can buy other FMCG businesses that are doing well, even large businesses that would give you good returns over the 5-7 year period. If you currently hold Heritage Foods, then it is a very tricky question. You might have bought it at 800 or 750 rupees. Probably just hold it till the results improve and keep a 10% stop loss from here, or keep a 310 rupee stop loss from here. And you would have to take the bitter pill if the stock keeps on falling, because I don't want you people lose all the money and because of one company if it is not producing results. You should have sold out. If you would have bought at 750, you should have sold out by 600 580 levels. If you have not, then at the moment, even now, it's not very late. You can put a stop loss and avoid being in this stock. Otherwise, if the numbers turn around, then you add into the stock once the numbers come up. Do not add at these levels unless the fundamentals of the company change. Yes, the management is pretty strong and there is good institutional holding, and these are positive signs for the company, that already institutional holding is around 80, more than 80%, which is pretty good. But only add this stock when things really improve. So this was my video on Heritage Foods. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.